Good evening, everyone. And my name is Vakar Khan, and I'm the Equity Research Analyst at William O'Neill India. And I welcome you all to this week's Market Wrap. Without taking up much time, let's start with the analysis of market behavior this week. This week, Nifty declined by 0.7% and behaved like a seesaw during the week. On Monday, market declined by 1% and reached its 50 DMA during the down move and found support near its 200 DMA. On the flip side, as volumes on Monday was lower than that of Friday's session, we did not mark it as a distribution day. On Tuesday, Nifty marked a strong up move of 1.2% and reclaimed its 50 DMA and traded just 0.2% below its 100 DMA. On Wednesday, it started on a strong footing and reclaimed its 100 DMA in its opening hour of trade, but was unable to capitalize on its gain and declined 0.4% during the day. And again, a distribution day was not marked as volumes was lower than the previous day. On Friday itself, similar market action happened and Nifty again reaches 50 DMA but managed to close near its 50 DMA at the end of the trading session. Three distribution days were missed on Monday, Wednesday, and Friday, as volumes on each day was lower than that of the previous session. Now, talking about some news, Ukraine-Russia tensions got intensified during the week, which led to crude oil surging to more than $120 a barrel. With US and UK already imposing ban on oil and gas imports from Russia, EU and NATO members also discussed whether to impose more sanctions on Russian oil and gas imports. A point-blank ban like US and UK won't be possible for EU because of high dependence on Russian oil and gas. Also, supply concerns added to the woes as Caspian Pipeline Consortium terminal on Russia's Black Sea coast stopped exports on Wednesday after being damaged by a major storm. The resumption in oil supply from the terminal can take almost a month to happen. Meanwhile, IEA is estimating that if tensions between Russia and Ukraine continue, 3 million barrels per day of crude oil and products will be unable from the market from next month onwards. Some key highlights from Jerome Powell's speech on Monday. Jerome Powell delivered a powerful speech on Monday this week when he said that labor markets continue to remain strong, but inflation is much too high and there is an obvious need to move to a more neutral stance and then move to a more restrictive one if it's required to restore the price stability. In particular, he added that in one or more meetings, rate hikes of more than 25 bps may be required going forward. A week back after the US Fed meeting, median rate for 2022 was calibrated at around 1.9%, which may now shift to 2.2 to 2.5% if the additional rate hikes are required. Now, taking a focus to some good news, India has achieved its ambitious target of $400 billion of exports for FY22 with 9 days to spare. In last 4 years, we can see that exports hovered around $300 to $330 billion and dipping to $290.6 billion last year. This year, exports jumped by a huge 37%. India has achieved this feat despite the COVID-19 pandemic and the ongoing Russian invasion of Ukraine. The surge in exports was fueled by engineering products, petroleum products, and chemical goods. Engineering products jumped 32% in exports to $93.2 billion, along with petroleum products surging by 88% to $46.5 billion. One of the major reasons for the jump in exports is rise in pent-up demand, which had fallen during the lockdown. Besides boost in domestic manufacturing due to production link scheme PLI, and implementation of some interim trade pacts have also led to surge in exports. Last week, we had upgraded the status to confirm the uptrend, as Nifty managed to stage a follow-through day on Friday, and it also reclaimed its 50 and 200 DMA. During the week, on account of low volumes, 3 distribution days got saved, and the D-day count still remains at 0, and market is in confirmed uptrend. Going forward, we would like market to trade above its 50 DMA and 100 DMA, and distribution day count to remain as low as possible. With markets in confirmed uptrend, stocks with good structural themes, along with strong fundamentals and breaking out of proper basis can be considered going forward. Make sure to identify stocks with early stage basis, as late stage basis are prone to failure. Thank you guys, and now is the time to take a break and enjoy the weekend. Hope you found this week's market wrap informative and stay safe and stay healthy.